Hey guys, UC here from iTradePrice. It is a little after 7 Friday evening. I know I've not been able to make a video here in the past few days. I've just been busy. So the update, right? So we have been using the UC EMA bot, right, for some time, and some of you are really sort of kind of dug through into it and really played around with it, watched the videos and understand the parameters and everything, and now you kind of know the market structure that you really feel comfortable using that. So that's great, right? But some of the feedback was that we want something that's hands-free because we have a full-time job. We just can't watch the bot all the times. Yes, you can have that kind of a bot, but it does have to have some sort of control, right? So I've been working on that, and I think I think it is a good bot that I just came up with, UC Max. I did the back testing, right? And so while back testing it, while sort of designing its code, looking for what sort of price action to consider for these kind of trades. High quality trades. So I have, I have in my back of my mind was that people like to use it for Apex, right? Because Apex has some really restrictive, restrictions around the drawdown, right? And then also people want it to be so that they have full-time jobs. They can't look at the market structure all the times. They can just put the on and off button. They can define some thresholds around how much profit they want the bot to stop at, or at what loss level the bot should stop. So you do have those kind of parameters to look for, but you don't want the decision making and understanding of the market structure, the EMAs. There are people who like that, I like that, and there are other traders who like that because of the way it gives them that flexibility. But then there are people who just don't want that sort of a tool, right? They just want on and off button and just forget about it. So in order to get to that level, right, I have been playing with different settings for this new UC Max bot, right? And before so I've not been able to make videos, but I was able to make the video today of the bot trading live. So you can watch that after this clip of mine, right, in the next section. But for now, I just wanted to talk about some of so this was the playback I did from January till like January 26th, right? This was the playback. And I ran the bot for all day from 8:30 till like market close every day in the playback on two charts. I did it on a 30-second chart and I did it on a 150 tick chart, right? 3 contracts on each chart, right, with 15 stop loss and 10-point profit, right? And there is no trailing, right? So there is no moving the stop loss to break even or anything like that. It just stays static, both the profit and the stop loss, right? So this is the split. This is the split each day between what the bot did for that day, right? You have the high and then you have the low of that day, right? And then that's where you close the day at 4 Eastern, right? 4 p.m. 10,400, 14,109, negative 1350. Had you done with one contract on each, right, this would have been your profit and loss. So I did the back test from January 5th till January 26th, and I will do it for a couple of months prior to this one as well, like December and November as well. And I know somebody asked me to do something maybe October as well. So we'll see about that. But I'll do that as I find time, just to build some expectancy. But my issue with playback has been with the tick chart especially is that they're not really accurate, right? So it can give you some false expectation, right? So I had that in the back of my mind. That's why I have been trading it live in a live market, right, from January 29th onwards till February 2nd. And you can see the February 2nd action, the trades in the next clip, right? So this is the high, this is the low. So just some observations, right? At a minimum, for like 95% of the days from January 5th till now, the bot at least shows you, I don't know, like $1,000 or $2,000, right? I mean, that's like, it does show you that figure before even if it goes negative from there, right? I don't think, well, the total for 30-second was 16,000, and for 150 was around 30,000, right? So for a total of around 45. And I run both the charts because some days you will see that the tick chart does better than the time chart, and on few occasions the time chart performs better than the tick chart, right? But for the most part, both of them have shown positive expectancy, right? This is where they close. So today's close was a little less than $3,100. The high of the day was 67.87, and the low was minus 680 only, right? But then there are days where you see the low goes up till that level. But again, I'm trading with 3 contracts on each chart, so you will see something like that, right? If you were to divide this by 6, you will see the drawdown or the low of the day on one contract that you would have done, right? So from that perspective, you can use one contract on Apex, right? So for example, if you were using this on one contract, right? So the drawdown, let's say low is the drawdown, divide by 6. Well, you can't, yeah, that's fine. So it will be something like this, right? So your low points for the day would be minus 2096, minus 530, blah, 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 this. But you would be closing that day nicely up for the most days here, right? I mean, yes, there will be losses on, but even in the days where there were losses, you did have the opportunity to close the bot in green, right? But again, that's if you have the profit and loss thresholds defined to say, hey, bot, stop trading after $1,000 in profit, right? But that could mean that you do see maybe negative 1,800 before you see the positive, right? That kind of thing, because that does not mean that you started the day with that, right? But what you can see is that even for the days where you have these lows, the positive expectancy I'm talking about, what it means is that the bot has the ability, or the strategy has the ability, to close in green even if it has shown you a red, right, during the day, a drawdown or a low point during the day. It does crawl back up for the most part, right? So that's what I mean when I say positive expectancy. And I've seen that in the playback. That's great, but I do take it with a grain of salt because I don't believe the tick chart, right? I mean, yes, it does show you directionally things, right, but it does mix up things, right? So it's not always accurate. So that's why I'm trying to run this thing live since January 29th, and I want to keep doing that for the next, I don't know, week and a half, 2 weeks, or good part of February. And then I'll see what my other observations are during this time. What I think can be further tweaked. It will give me further insight, but I just wanted to share the progress and just be transparent with everybody around what I'm trying to do and achieve, right? I don't want to just put it out there right now without having the full understanding and picture of what the expectancy is, and then how you can tweak it or optimize it to make it friendly for Apex accounts, right? To me, it does look okay, but then running an Apex account, I would say with 3 contracts, 2 contracts can be a little tricky unless you build some cushion, right? Let's say you pass the evaluation, you get into a P account, and then now your P account is up as well. And then you have like $4,000, $5,000, $6,000 worth of cushion. Again, I'm talking from, maybe 2, 3 contracts if you're trading, but if you're trading one contract, that let's say you have a $2,000 worth of cushion, excuse me, over and above your, your threshold, then yeah, I think things can look good, right? But I want to see it a little bit more. I want to see days like 3,100, days like 10,000 here, right? Sure, I don't mind a $4,800 down day, but I want to see $11,000 day as well. So far in the live market, that one I've been trading, it's been good, right? No red day in the past week, so that's good. But yeah, just wanted to share this stuff with you. So enjoy the clip for today, the next one that you will see, and then towards the end I will play it. I think few members requested. I think it was Ali and a couple of other people who requested that what if we trade this UC Max and try to capture only 3 points profit because it will have a higher winning ratio, right? So we'll see about that, what that ends up being. But yeah, this was the run for today, right? The one I ran in Sim. You can see for today the profit was 30.89, and here is the split, right? So we started off the day with like plus 587 first trade, then couple of negative, like not couple, just one negative trade, and then a string of positives, and we saw a high of 39.15, right? Before we started some red trades, right? A little drawdown all the way down till like 406, and then positive expectancy kicks in, right? It takes you back up, and then we went all the way up till like $6,000, then dropped again, then went back up to like 67.87. That was the high of the day, and then we started going down and closed the day at around 3,100, right? So again, we stopped at 330, but yeah, you understand the picture, right? You understand what I'm trying to say here. So enjoy the clip next, and then I will keep sharing with you guys the progress, how it's going, and everything else. Okay, talk to you guys later.
I gotta move on. Gotta move on. Gotta move on.
Order submitted. Order filled.
I gotta move on. I gotta move on. I gotta move on. I gotta move on.
Means your month is going to be something that Chairman Powell and the Federal Reserve Board studies. You're darn tootin', that's correct. Andrew, back to you.
Rick, thank you for that. I want to get straight over to our panel for some instant reaction. I see Steve's looking down at those numbers. Just want to get his quick take on how you're reading this, Steve.
This morning I told you there was a lot of talk out there about an upside surprise, most of it for seasonal adjustments. I can't tease out how much of this was seasonals at the moment, but the trouble is that you have surpassed what might be expected if this were all seasonals. And I would point, I hope Rick can back me up on this, because it looks like there was a massive revision to December from 216 to 333, as well as revising up November 182 to 173. I haven't had much of a chance to look at the detail. I did see that professional and business services were up strong. You had private education up 112,000, and leisure and hospitality just up 11. So a lot of that coming in.
Yeah.
Season
126,000
Plus,
two-month
right?
revision
Plus.
to the upside, and you're right. February, early February, January jobs report always has some surprises.
But this one especially because of the pandemic, Rick, and what's happened with that. The last January was all messed up, and so the season was messed up. We expected that. The trouble is this is maybe almost 100,000 over the top forecast I saw that was already elevated because of the seasonals, plus the prior suggests we have some strength. And I'll just close it with this. Maybe Powell knew something on Wednesday when he said, you know what, March ain't on.
Okay, Jason.
Well, I don't
Furman.
know how much he knew, but 10-year note yields are down 26 base points on the week before the number. Anyway,
Jason,
continue. I'm sorry.
Take me inside three offices this morning. I want you to take me inside Jay Powell's office. I want you to take me inside the White House. And then I want you to take me inside Trump headquarters. Who's cutting commercials and what are they going to say?
Look, the Council of Economic Advisors was the first place in the government to get this number. They got it midday yesterday. They then transmitted it to the Fed. Jay Powell had no idea this number was coming on Wednesday, but boy,
Jason,
does it
just
confirm.
to be clear, of course he did, Jason. Just want to be clear. I'm big in a joke here that basically making a comment that Powell had it right on Wednesday.
Yeah, no, they're not sitting there thinking like, oh, we need to cut now. I mean, there's two halves to the decision to cut. One is, are you worried about economic weakness? Yeah, maybe the January number was a seasonal adjustment, but you have the upward revisions, and you have jobs growing at a pace of about 300,000 a month over the last 3 months. You can't just put all of that down to seasonals. And then the one threat that remains to the economy on the inflation side is that the low inflation is maybe transitory, that we're not in steady state when it comes to the wage side, and you have that 0.6 up. Now, there's one weird thing in this data that I want to understand better. The one thing you didn't mention, Rick, that's on the soft side is hours were down 0.6%.
gotta move on. I gotta move on. I gotta move on. I gotta move on.
Order submitted. Order filled.
I gotta move on.
Stop filled.
I gotta move. I gotta move on. 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 move on. I gotta move on. I gotta move on. I gotta move on. I gotta move on.
After that stronger than expected jobs report, we have seen the futures move lower. Dow futures down now by close to 120 points. S&P futures still up by about 4 points. The NASDAQ indicated up by about 55. Joining us right now is Sarah Malik, who is Chief Investment Officer at Nuveen. And Sarah, how do we read this? A stronger economy, which has to be good news for stocks, but for anybody who was counting on a cut in interest rates, don't hold your breath.
Hi, Becky. So these employment numbers throw a monkey wrench into the disinflation narrative for two reasons. One, average higher hourly earnings, which are up 0.6%, and also the work week numbers, which are down 0.6%. So what does that mean for investors? Well, first of all, the Fed, it pushes out rate cuts likely till the second half of the year. Our call has only been for 3 to 4 rate cuts this year because of elongated inflation. Looking at the markets, tech has been leading here. We're just passing through the biggest week for tech earnings. My question is, what is the catalyst to take us further? It's going to be challenging unless market returns can broaden out, which I think will be a headwind and difficult for markets to do. And finally, we saw how fragile the markets can be this week. Just go back a couple of days when the FOMC threw water on that first March rate cut. Markets declined, and also with the mini banking crisis with New York Community Bank, we saw markets swiftly react negatively to that. All of that, I think, makes it tough for the market to find reasons to rally from here, especially given today's number.
Ron Krzyzewski was with us earlier this morning. Stifel thinks that we're at the high watermark for the S&P 500 this year just because they think earnings are only going to come in up about half the range that the street's expecting at this point. I guess a lot riding on earnings.
Well, our price target for the S&P 500 for this year was 4,950. So I agree that there's not a lot of upside. The key question is going to be, can this economy continue to hold up in the face of higher interest rates and higher inflation? What we're seeing today is, yes, it can. But under the hood, we do have consumer delinquencies increasing. That's an issue. Credit card delinquencies are up at these high interest rates. Manufacturing data starting to recover is promising. But earnings, the driver's been tech stocks, and I think a lot of haves and have not in the technology companies, from Apple on the negative side to Meta and Amazon winners. And whether that can continue again like it did last year is pretty questionable to us. I think we're getting at valuations levels where we have to think, what is it that can take this market higher? I don't see that catalyst.
Look, a stock like Meta, though, up because of those incredibly strong earnings reports. And again, if you tie it back to earnings, if they can deliver, hard to not reward them.
I agree. And these tech companies did a great job normalizing post-COVID. They invested heavily in their workforces. They are cutting back to meet more of a normal environment. Amazon, a winner because it invested heavily in logistics, which is manufacturing, which we're bringing closer to home. So Meta, Amazon winners. But you're also seeing Apple, which is having a challenging time normalizing post-COVID, higher regulations in their app store, difficulties in China. Some of these mega caps also, are on the flip side. So we need to be more selective with technology stocks, and also just finally touching on that second half of this year with elections coming around the world, 77 elections this year, 60% of GDP going to the polls. If you look at years when the U.S. election as a leader, when the results are going to be close, markets tend to be more volatile to the downside. So I think that could be another headwind for the second half of this year.
Sarah. Thank you very much for joining us today, Sarah. Great to see you.
Thanks for having me.
And folks, that does it for us for the week. We're going to head back to New York City. Andrew, we will see you back there on Monday. We'll see all of you there on Monday. Have a great weekend, everyone. Right now it's time for Squawk on the Street.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Stocks weathering some cross currents here as the jobs number has its hottest print in a year. 353K, upward revisions, even as wages rise above estimates. 10-year is a little suspicious, just flirting with 4. Our roadmap begins with all of these super six-pack earnings now in. We're going to break down results from Apple, Meta, and Amazon.
Plus, we got that latest jobs report, and it did show the U.S. economy added 353,000 jobs in January. That was far higher than expected. Later this hour, we're going to talk with Chevron CEO Mike Wirth. That'll be a first on CNBC.
Order submitted.
Of course, the company reported earnings along with the other U.S. giant, Exxon.
Let's get first to the big tech earnings, starting with Apple, moving lower now despite this quarterly beat, ending 4 straight quarters of revenue declines year on year. China did miss. That overshadows some growth in services in the iPhone. And then Jim's been busy on this Vision Pro rollout
Well,
today.
I wanted very much in my little chance, the window I had with Tim Cook this morning when they unveiled the Vision Pro, to talk to him what really mattered. And I said, look, all of this is really terrific, but how about that
Order
first
canceled.
power in China in April 1? What's that going to do? I mean, like the juxtaposition, David, you have to understand. You're a cynical older guy. I, on the other hand, am welcome to wonderment.
Naive and hopeful.
Naive and hopeful.
Yes.
And so when I see something that's as exciting as this, I don't say, oh, that's an asterisk, it's only going to sell 160,000. I say maybe my life is different, which I shared to Tim. I said, you know what, Tim? Because, of course, it's Tim.
Of course.
In the same way that it's, I don't know, Cher, right?
Yeah.
Or, lady, like in God. Oh, my God.
Yeah.
What do you think you have? My wife put me to have. It's not bad.
Did you get your special time?
Gotta move on.
Order submitted. Order filled.
gotta move on.
Order submitted. Order filled. I gotta move on. Gotta move on. I 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 gotta move on. Order submitted. Order filled. I gotta move. I gotta move on. 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 Stop filled. Order submitted. Order filled.
I gotta move on. I gotta move on. I gotta move on. I gotta move on.
Order submitted. Order filled.
I gotta move on. I gotta move on. I gotta move. I gotta move on. I gotta move on.
Order submitted. Order filled.
I gotta move on.